Hello everyone, Kolonji Murray with TaxAssurances. Just want to prepare a helpful video for people that are about to retire or are like a few years into retirement. So obviously they've quit their job and they don't have to get up and go to work every single day. There are a number of challenges or opportunities that come up. So I figured, putting out a helpful video may give some clarity from a tax standpoint about how to approach retirement and any income that you may receive. First and foremost, if you're getting like a pension or something like that, make sure that you're having some federal taxes that are taken out. Certain states, depending on the type of job that you had, like say for instance, if you had a government job in that state, like New York, you may not have to pay any taxes on that. So that's kind of the first thing when it comes to income. And usually like your HR department for whatever entity you're working for can give you clarity about pension and taxability. But obviously giving it to someone like me, I can obviously answer that question for you. The next piece is Social Security. So Social Security has a couple ways of looking at it. Now, let's say for instance, you are only getting Social Security income and no other income whatsoever. If that's the case, then none of the income that you receive from Social Security is taxable. So you don't have to worry about anything. However, Social Security does what's called means testing, meaning that the more income on top of your Social Security, so say for instance, you get a second job for argument's sake. Let's say for instance, you're getting a pension and you have the second job. Let's say you've got investment income with dividends and capital gains and rental real estate, you've got partnerships, maybe a business. The more of that income that you start to add into your total income, the more of your Social Security becomes taxable. Now it does cap out at 85% at this point of me doing this video in terms of how much of your Social Security is taxable. But again, as it relates to just Social Security and combining with everything else, just recognize that you may have to give a call to Social Security and request that they take taxes out. And then the question there becomes, well, how much do you have taken out? The important part there is making sure that you have an understanding of what the overall either individual or family tax rate. Family tax rate meaning, say for instance, you have a spouse and you file jointly. You want to recognize that you're not just looking at your Social Security number, you're not just looking at your income, you're not just looking at your pension or your W-2, but you're also looking at your spouses, you're looking at if you've got real estate, other investments. All of those pieces of income get combined and ultimately it's going to create an overall tax rate. So you want to understand that, and a lot of times, some people are unsure. One of the things that I do with my clients is I give them at the end of the year, at the end of the tax preparation process, an understanding of what their effective tax rate is. So that way, if say for instance, they weren't paying enough in Social Security, they're now able to call up Social Security, go back to them and say, hey, do me a favor, like last year you guys only took out 12% of my income. However, my family tax rate is, let's say for argument's sake, 17%. You can request that they have that taken out. It is worth noting that with most states, Social Security is not taxable. So from a state standpoint, you're not going to have to worry as much. But again, from a federal standpoint, if you have that other income, you want to make sure you account for that. And then obviously, if you've got any other source of income, like I said, if you go ahead and you quit your job, but then you realize you stayed home for a couple of months, like 6 months to a year, and traveling got boring, or you don't want to play golf as much, or you're bored in the house, you want to go back to regular, not necessarily a 9-to-5 job, but a job where you're getting out of the house, you're staying active, you're staying engaged with people. That also gets included with, again, that if you're getting pension, Social Security. So you're making sure that you account for all of that income. Obviously, there are more variables if you've got dependents, if you've got farm property, if you've got any number of other things that are going on in your life after you have retired from a regular 9-to-5 job. Those have to be taken into consideration. They're a little too much for a video like this, but obviously having a conversation with me or someone like me can give you some further ideas on how to manage the tax liability that comes with going into retirement. And with that being said, by all means, reach out, give me a call. I would love to help. Until then, happy retirement.